All right, welcome back to Market Day Report. I'm Chris Swift. Let's take a look and see if we got anything going on in the corn market that we have not had going on so far this morning. And lo and behold, it doesn't look like much. I got the May contract still at up 2 1/4, 433 and a half. The July up 1 3/4 at 444 and a quarter, and December slipping a little bit more, still up a half, but 468 and 3/4. See what the bean market is doing. Bean market's lost a little bit more ground, down 7 3/4 on the May now at 1166 and 3/4. The July down 7.5 at 1180 and a quarter. New crop novies 1170 and a quarter, down 8, and I can see they've been as low as 69 and a quarter, so starting to change a little bit there. Take a look at our Chicago wheat's been one thing still higher today, and still is up 3 1/4 on the May at 561 even. The July contract up 4 at 576 even. Kansas City hard red winter wheat had been the shining light, still is marching higher at 591 and 3/4, up 14 half. The July contract up 12 1/4 at 586 and a half. And we'll see what Minneapolis spring wheat's doing, see if it can catch up with them. It's still holding its own. May up 7 3/4 at 659 even. July up 7 half at 665 and a quarter. I got my guest Todd Bubba Horwitz in. He's with Bubba Trading. And Bubba, it's always a pleasure to see you there this morning. What kind of outfit do you have on this morning, buddy?
This is my trading jacket.
I'm
trying to take over for the cow guy.
Good deal. We're ready to roll this morning then. That's great. So got a little bit of weather coming in. We've got warm weather, wet weather. Tell me what you're seeing out there.
Well, I think the grains have found a bottom. I mean, it doesn't mean they're going straight up from here, but the action over the last week or so has been very solid and very bottoming. That would indicate to me that they're going to finally catch up to the rest of the commodity space. You know, we've seen for months other commodities around the globe have been flying higher, and the grains continue to have that thumb on the scale keeping them down. But it looks to me that they're finally getting ready to start to move higher. And again, as long as we can put in a good solid base, I think you can build in a good solid rally. The big problem we have is, of course, the input costs continue to rise. Interest rates continue to rise, inflation, which we had a CPI this morning, which again, you know what I think about that. I told you those numbers were ridiculous, and there's no way that we're only at 3.5%. So where's the rate cut going to come with the 10-year trading at about 4.51 right now?
You know, Todd, we know that the government likes to exclude food and energy, and they claim that the volatility of it. Clearly, there's no doubt there is absolute volatility in those markets there. But that's what affects you and I the most. It seems like with that, there is no chance of a cut so far this year.
There shouldn't be. Again, there's only two reasons they can cut, Chris. If they can cut for a political reason to help the incumbent, or they would cut because they see a recession or a depression coming. If they're going to cut because they think it's going to slow, because they haven't been able to slow inflation. And of course, the Fed is so far off their mandate, which is jobs and stability, job stability and price stability. That's their only mandates. And they're way far beyond that as a private corporation. If they were a regular regulated corporation, they'd be in jail.
I don't have much doubt of that whatsoever. So speaking of the consumer there, and we're pretty much under the impression that they are strapped at least a little bit, but still spending out there, where are they finding the money?
Well, as long as you got credit left on that credit card, or you got checks to write, you got money, right? You can do whatever you want. This is the problem that's going to create the big meltdown when it finally comes. People are spending money that they don't have, and we're getting more layoffs at more companies. We're getting higher costs. UPS and FedEx are raising their tax costs in 3 major states right now, which is Illinois, California, and New York. And of course, that's only the start. They'll raise everywhere as they get away with it. The cost to the consumer continues to rise, and nobody cares. They continue to sit back like it's no big deal. And of course, I think it is a pretty big deal. But, you know, again, until it affects you directly, you kind of ignore the problem that's in front of your face.
Yeah.